Welcome back. I'm Brandon, the HBAR Bull, and I do some contract work for the HBAR Foundation. We've been doing a series of interviews with investors that have been involved in deploying capital into the Hedera ecosystem. Today, we welcome Aaron Stachel, partner at First Mile Ventures, to tell us about their firm and their interaction with Hedera. Welcome, Aaron.
Thank you. It's great to be here.
Yeah, I'm looking forward to this one. I'm really interested into what venture capital's thinking about the space. So we've got some good questions lined up for you. So to start
Awesome.
off, can you tell us about First Mile Ventures and your personal journey into joining the firm?
Yeah, so First Mile is a pre-seed and seed technology investor based in Colorado. I would call us a B2B generalist. So we do primarily B2B software, but very broad within that. And we've done a handful of crypto projects, including Hedera and its predecessor Swirls. And I would say, like, when we say pre-seed or seed, that can mean different things to different people. But normally it's you've got a team, they've built something, they haven't started selling it yet, and they're getting ready to, or they just started selling something. We want to be part of the round that really takes them into market, demonstrates more meaningful traction, allows them to get a larger round of capital done down the line. And so we did our first fund in 2015. I had joined my partner Bill a couple years before that. I had done my undergrad at West Point, spent 10 years in the Army as a helicopter pilot, but I got my MBA after that and spent a lot of time working with startup companies, and I had kind of caught that that desire to go work in a fast, growing, small, nimble company. I ended up taking a job at a big giant company. It was actually the largest gold miner in the world is headquartered here in Denver. So I coming out of business school, the tech scene wasn't what it is today in Colorado, and I spent a couple of years doing M&A and investor relations at a big company. But as I tried to make my way back down to a small, fast-growing firm, I got connected through that network I built in business school to my partner Bill, who's an entrepreneur that he started a company, and among a few others, started a company in the late '90s called Storage Networks that he took public in 2000. It was really the first cloud storage company. I think it was like before the phrase cloud storage existed. And so he had done a lot of angel investing after that IPO, and eventually saw what was happening in Colorado and the opportunity to build a firm to back like all the great companies getting started here, and was looking for somebody to help him. And so I was kind of in the right place at the right time, and joined Bill in 2013, and we did our first fund in 2015, and we're investing out of a fund two right now that we launched in 2020.
Yeah, it's a fascinating path. I know what it's like, to go from one thing to another that's completely different. You went from the Army into VC. I went from the oil industry, and now I'm in crypto. So I feel what you've gone through. So how did First Mile first get involved with Hedera?
Yeah, so we pulled together the first round of funding for Swirls when Hedera was just an idea, and we didn't even have the name yet. And so Mance and Lehman were professors at the Air Force Academy, which is down in Colorado Springs, and where my partner Bill lives. And he had gotten to know Mance during that time, just as a local technology entrepreneur that kind of had some intersections with the academy, and got to know Mance a little bit. When he left the military, he started a company doing mobile device security. And I mean, this is like pre smartphone. So it's like the devices that, the UPS and FedEx guys were carrying around to do like package check-ins and stuff. So like way ahead of its time kind of idea. And, Bill almost invested that company, but Motorola actually bought it right away. And, but they stayed in touch, and, Mance did another company that was acquired by Ping Identity here in Denver. And he became the head of labs for them doing R&D stuff. But he was living in Texas, and he came to Denver to tell Ping he was leaving to start this crypto company. And and then he drove down to see Bill and I and said, "Hey, I want to tell you what I'm gonna go do and see what you think." And we loved the idea, and said we'd help him pull together that first round of funding. And that was, I think, 2016. It was just Mance and Lehman at that
Yeah.
time. And and it was our first crypto deal. We had been kind of poking around at the space a little bit, reading. I think I had bought like $20 of Bitcoin. I looked at like a wallet exchange interface company, and I was like, let me just get some and start playing with it. Obviously, should have bought a lot more back then, but
It's all our problem.
um, yeah, it, it's a complicated space, but we knew enough that when Manson Lehman came in, and the beauty of this team is like they're brilliant, but they're also professors. And so they have got all this experience communicating complicated ideas to people who don't understand them yet and helping them understand them. And so I mean, we knew that Bitcoin and Ethereum, they were slow, they were expensive, they consumed lots of energy. There's like these big blocks with lots of transactions, and you couldn't quite be sure that the miner was going to be totally fair in the way that they ordered those
Sure.
transactions, and how, if you believe there's a that crypto and blockchain is going to be a big deal in the future, it was quite clear to us then that the existing platforms were brilliant innovations and ideas, but not really, they didn't get it quite right from
Sure.
a technical infrastructure perspective, and that Manson Lehman had a way to take all the great things about those innovations and rebuild them from the ground up to eliminate the flaws. And so we made that bet, along with the governance. I think is a big innovation that
Yeah.
I don't think a lot of people appreciate, but we thought it was certainly really important. We could talk more about that, but so we pulled together a very small round of funding. Back in 2016. A lot of people were talking about crypto, but from like the investors that we knew, mostly were like, they hadn't done anything yet. They were not comfortable yet. They were just thought it was really early, really risky. So I mean, it was hard to find anybody to come along with
Yeah.
us in that deal.
Wow.
And but obviously it turned out quite well for us. And we've been fairly involved since. My partner Bill has sat on the governing council on behalf of Swirlds, because Manson Lehman had positions via Hedera. So when
Mhm.
they kind of had a conflict of interest, Bill would represent Swirlds on the membership council, or on the governing council, and he's recently elected to the membership council as well.
That's some great Hedera history. Let's open our lens up a little bit, widen our lens a little bit. We have a lot going on in the current macroeconomic environment. What are your thoughts on the macroeconomic environment, and how does it affect First Mile's investment strategy?
Yeah, so I should note that like our strategy is primarily B2B
Mhm.
investors. We've been really interested in like the infrastructure components
Mhm.
in the crypto space. Obviously, Hedera is a layer one network. Obviously an infrastructure play there, but another company we did in our last fund is a project called FIO,
Mhm.
FIO, and it's a wallet name kind of address where you can like a human readable. You could have HBAR bull dot whatever wallet dot
Sure.
bread or whatever, and like if I needed to send you something, it'd be easy to know and not screw it up. And even better, there's all sorts of cool things they do around transaction metadata where you can push, like a merchant could push a order cart to your wallet name, and you could, with the amounts, and you just click to pay like you would on any other e-commerce transaction versus, hey, like scan this QR code, send me this much money. Like that doesn't work like that in the rest of the world. So we've always kind of been excited about like, we see the potential here, but there's like some real kind of fundamental missing pieces for this to go mainstream.
Mhm.
And that's kind of been some of the interesting things we've invested in, or somebody that's using that technology to solve a problem for a business community. And so crypto has really taken a beating in the recent months, and I think a lot of it, a lot of what's been going on in crypto has not been the stuff that I was just talking about. It's
Mhm.
been most of the activity in crypto is people speculating on the price of cryptocurrencies.
Yeah.
And or the thing that blew up was NFTs, and
Hmm.
these like just crazy prices for monkey JPEGs or whatever, which that's not our thing. Obviously a lot of people made a lot of money on that, will tell me I
Hmm.
just don't get it, and I don't, but that's neither here nor there. So we haven't done a lot of crypto stuff over the last few years because I think a lot of people are like, oh, this is like a place where you can get rich quick. And so there's a lot of stuff happening, a lot of speculation, a lot of noise, a lot of things got really expensive. So even if you saw something that was interesting in the crypto Web3 space, it's like, well, it's just getting started, but it's like a $50 million
Yeah. Not at
some
this price.
crazy price where like you have to believe that it's going to be a 10 or $20 billion outcome for it
Yeah.
to be interesting, which is they're pretty rare outcomes. And so we kind of did not find a lot of things that we could do. We've done a couple crypto related projects in the current fund, but so to answer your question, I think like this pullback in the space is going to be good because it's going to wash out some of that noise. It's going to wash out the people that thought this was going to be an easy way to just get rich quick.
Yeah.
And the people who are really building something useful and are there for the long haul are going to stick around and make those things come to fruition. And so, and I certainly put Hedera in that camp. If you look at the organizations involved in the governing council and like this management team and the community that's building up around it, I mean there's a real story there where like you look at like, I mean I don't know how many dog themed coins there are now, but it's like, I mean are all those gonna, I don't know that I'd bet that all of those are going to be sticking around 5 years from now. I don't know if your audience might get mad at me for saying that if
I
they're
don't think
big
so. I
big
think you're fine.
believers. Yeah, but
Hedera's a
yeah, so I
different
think
animal.
a lot of the noise is gonna wash out, and so I think this. I mean, it's unfortunate. Yeah, obviously, a lot of the beauty of crypto is that you can, fund development and developers can participate and benefit from that, and so that the price of these tokens is really important in a lot of cases for the sustainability of a project. And so there could be great projects that are getting
Yeah.
hurt right now just because it's hard to sustain their community and development without kind of that currency. Um, but I think it's, there's probably, especially if you separate sort of like the speculative things we were talking about versus using blockchain to solve problems. I
Hmm.
mean, I think that thesis hasn't changed at all. And
Sure.
so I think, we certainly are not. If anything, I think we're probably more excited about the space now than we were a year ago when it was just like, this feeding frenzy that was hard to make sense of. Um,
So speaking of, finding solutions and building on top of these platforms, is First Mile actively investing in the Hedera ecosystem?
yeah, we have not done anything. Yeah, we've looked at a number of things over the years. We've actually seen some things quite recently here. Um, Certainly, always interested. We are a generalist investor, and as I mentioned, a lot of things that have popped up recently are been kind of like consumer focused around like NFTs and art and things like that, or metaverse and gaming, which it's not really our sweet spot. But like the broader like fintech side of or DeFi side, if you want, is I think really interesting to us. And one of the things that attracted us to Swirls and Hedera in the first place is its focus on these like enterprise use cases. And
Hmm.
so this idea that blockchain is really valuable technology and allows you to do all sorts of interesting, cool things and solve problems in new, elegant ways that weren't possible before and create new business models. I'm really excited about that. I think we're still in this like really early days where a lot of that stuff that's most interesting is it's hard to see a path for it in the short term. Where like the NFTR projects and stuff, it's like that stuff is super easy to spin up and get going. But like the
Sure.
real potential of blockchain of like replacing some of this legacy infrastructure with a distributed architecture that is more efficient and fair and fast. And there's a lot of like incumbent players in those spaces
Yeah.
that are going to be hard to displace.
Yeah, well, I mean, there is a lot of things, beside the metaverse and the NFT. There's provenance of data, there's supply chain tracking, there's micropayments, things like that. Where do you think in the DLT space has the most potential?
Yeah, I think in the short term, like the DeFi space, so like a lot of this stuff, it could take a really long time. When I was first getting into crypto, it's like I read like this article about like how long it took to get credit cards like to like mass adoption. And it was like, you go back to like, I don't know how old you are, but I remember like when they used to do, credit card companies used to do ads. It's like, oh, here's a better way to fill up your gas tank. Like you don't have to stop right at $20 so that you can hand the dude a $20 bill. It's like you can like fill whatever, like Jerry Seinfeld was doing those commercials back in the day. And that was like the 90s or something. And it's like, it took like 20 years to get to like where people were using credit cards 50% of the time in a restaurant kind of thing. It's like, so some of these things that like people envision doing with crypto probably aren't going to be the thing. Like you still can't buy anything with Bitcoin practically anywhere. And it's like the most widely held, widely distributed coin out there. And so like some of that payment stuff, I think everybody's really excited about, but and part of it is like the widely held coins like Bitcoin or Ethereum are not well suited to payments because they don't have the throughput. They're expensive. So if you're buying something small, it doesn't make any sense. They burn up lots of energy. And so, and people are mostly holding them to speculate on the price of them. So, I think that's what's exciting about something like Hedera is it opens up all these use cases. I remember when we were making that investment back in 2016, there was a podcast, the Andreessen Horowitz podcast, that had Vitalik Buterin on it, maybe the Coinbase CEO. But it was like, at the end of it, it's like, what are your closing thoughts? And it was like, Vitalik was basically saying, look, like all this cool stuff that we're talking about doing is impossible with the technology we have. And we don't have any way, we're a long way from figuring out how to fix that. Like there's no clear path and how we get to that scale, throughput, efficiency, fairness to where, a big company or somebody is going to build on top of this. And not to mention the governance model. And so I think there are a lot of, opportunities out there. Again, like the things that excite us more than like the kind of short-term stuff I'm talking about is like, when you put something on a ledger, I would say like more generally, it's like, there's a lot of like, oh, this, but decentralized. We see a lot of pitches where like, we're going to decentralized version of X. And it's like, it's kind of like Web 1.0. It's like, it's a newspaper, but on your computer, some of this stuff feels like that, where it's like, okay, like, is anybody complaining about, that's why I bring up payments. Cause it's like, talk to it's like if you try to explain like, oh, this will make payments faster and more efficient. It's like, what do you mean? Like I pull out Venmo or Zelle and I can send my friend money and like 2 clicks of a button and there's not like really a pain point there. So I think like that stuff is going to be really slow to get adopted, maybe more so in other countries that don't have stable currencies. And maybe there's a lot of underbanked people, but I don't think that's the case in a place like the United States. Sorry, you're going to jump in. But.
No, yeah. So there is, I was biting, I was chomping at the bit because there was some news that came out just a couple of weeks ago that I think is really important. We actually been covering Coinbase today because Coinbase put HBAR in their roadmap for listing. But I actually think this other piece of news is actually bigger, and it is around micropayments. So I'm not sure if you're aware of Drop. Drop is a micropayment solution in the space, and they mentioned real nonchalantly that they're going to be added to WordPress and Shopify as a possible
Yeah.
payment solution. So that's really has a lot of a potential. The reason why it doesn't seem like it's a pain point now is because people are used to doing subscriptions and being the product instead of the customer when it comes to ad-based systems. They're not used to the way micropayments could be with an ultra-efficient DLT technology like Hedera, but it does become possible with Hedera. So I'm really
Yeah.
interested to see what Drop does with that and what things that WordPress and Shopify offer for it, because it's really going to upend the way we do payments on the internet. It's going to be interesting.
Yeah, and I agree. Again, that's like one of the things that makes Hedera so interesting, and the way that they price transactions and the speed and efficiency there, where you can really start to do cool things like that that people sort of envision doing it but aren't possible are possible with Hedera. So you see like the move of traditional media towards things like Substack, and
Mm-hmm.
like there's you see this everywhere in life where it's like, oh, we used to all just have cable, but now there's like 10 different streaming services. And we used to, like there's everything's behind a paywall now in a lot of newspapers and magazines. So it's like, oh, here's an article you should read. It's like, sign up to subscribe. And it's like, nobody needs like 100 subscriptions in their life. And so the
Mm-hmm.
idea of doing micropayments, I think, is super interesting use case for Hedera. Um, but I think one of the things that excites me about Hedera is like, the potential of all, like, you just look at the governing consortium, and this is like something I think the market doesn't appreciate. There's like a lot of true believers in the crypto space, that want everything to be decentralized, and I think that has caused them to look at Hedera as kind of like, why do you have all these big companies involved? Isn't that a bad thing if we're trying to like liberate, the economy, and there's a sort of libertarian sort of ethos in a lot
Mm-hmm.
of like the early crypto adopters. But it's like, the crypto community has done an absolutely terrible job of like pushing beyond the early adopters. And it's like, you look at like, where are the users? It's like they are with the big companies. And
Mm-hmm.
so, we're really excited about the potential for big companies that want to solve problems to use Hedera's technology to do that.
Yeah, and also, I mean, if Hedera can meet the needs of large mission critical applications built by these companies, it can meet the needs of anybody, any startup or anybody else. So
Right.
meeting that high bar makes a lot of sense.
Yeah, I think there's like, that's where a lot of the on ramps to get mainstream users on the crypto are probably more likely to come from a big company incorporating Web3 technologies than a startup, getting, billions of users. And so I think that's, really interesting and exciting.
Yeah, makes sense to me. So you did mention DeFi a couple times there, either personally or through your fund. Is there any ways you're getting into DeFi?
Yeah, we've got a project in our new fund, called Ichi, and it's a stablecoin project. And so we've been kind of learning a lot about, the space moves so fast and there's so much going on. It's hard to keep up. But we've been learning a lot about DeFi in the past year or so. It's like kind of those strategies to generate extra return, I think, are a little bit difficult for a venture fund structure, probably more suited to a hedge fund structure that's trading and holding large amounts of crypto. But it's certainly something like worth thinking about and looking at and trying to understand. We're already a very early stage investor taking a lot of risk, and so we've got to be careful to make sure we understand risks, and the security of some of these projects is like, I'm sure you've seen a lot of headlines recently where like some of these protocols seem like they're really well funded and really smart people at the top of them. And this isn't necessarily a critique of the system, but I mean, like, a lot of this stuff is really complicated, and there's going to be flaws in it the first time. And some of these things will break down and expose flaws and gaps, and over time that'll make the community better. But yeah, I think that like, broadly there's just a lack of there's probably not as much like prudent risk management in the sector as there should be. Which again, like another thing that I think is really great about this team and its governance model. There's probably more more conservative, more forward thinking risk management, trying to do the right thing. And I think that's probably frustrated the community a little bit over the years that you see again like some of these totally garbage projects just like taking off kind of like a meme stock like
Hmm.
way. And a lot of people that bet early on Hedera is like, why aren't we going up? Why aren't we creating all this hype and energy about, getting these kind of sky high token prices? Um, but again, I think you've got a team that's focused on solving problems and, providing value like over the long run. That's going to win out than, trying to make a quick buck off a monkey JPEG or something.
Yeah, well, I mean, maybe that's something we can tease out a little bit. HBAR and Hedera maybe hasn't performed up to the potential it's had. I have a few ideas as to why that's been. I think one of them is because they use their token, they use their treasury to build out the infrastructure, to build out the ecosystem, instead of using the token to incentivize more people to buy the token. I think that's one of the reasons why
Right.
we've seen some pressure. Also, just communication with the story, things like that. What are some of your thoughts around that? The lack of performance possibly with HBAR over the past few years.
Yeah, I think a lot of if you look at this space, there's always done things to be, careful of, the laws and the
Yeah.
agencies that govern this space. And, they try and do things above board in the right way and to not bring, legal distractions, which you've seen in other places. Where trading is halted and there's lawsuits and stuff. And, the Hedera team is like, we would rather be safe than sorry. And so, again, I think that sort of more conservative, avoiding any kind of speculative, push up the token price kind of thing. They've been careful and that may have frustrated some people, but, I think long term that's going to prove out to be, the right way to have done it and to stay in the good graces. Because if you think, regulators are going to leave the space alone, then you're probably a little bit naive. And
Yeah.
so I want to be behind the team that's been doing it right the whole way along. Um, and I do think, as I mentioned earlier, that there's, I think, just some like misperceptions and some sort of like ideological sort of, dogma in the space where, some of it is like a lot of the early adopters were already like in on Bitcoin or Ethereum and they're like maxis. And it's like
Tribalism.
anything
Yeah.
that's like saying they're better than my thing is, like a threat to me. And
Sure.
like I've been building here and I own a bunch of these tokens. So like, even consciously or subconsciously, it's like, I need to like ban these people that are, blasphemizing my thing. And
Yeah.
I think there's some of that sort of tribalism in the crypto space. And I think there's just a lot of misperceptions about their path to decentralization, which they've certainly accelerated over the last year. I think there's a lot of misperceptions about the role that
Mhm.
the governing council members play. Again, I think there's a lot of skepticism of big companies in this space. But again, I think the governance model is something that really attracted us to this project in the first place. Because again, if I'm a big company that wants to build a distributed database for my logistics supply chain, it's like, if I go look at a project that's run by a handful of people, or the opposite, like Bitcoin, where it's like completely distributed, it's like, well, what's going to happen if this thing forks? It's like, well, it's up to the miners,
Mhm.
and maybe it will, maybe it won't. Like, well, what happens to your application if it gets forked? It's like,
Yeah.
versus a governing council that can it's broad enough that you can get a lot of voices, and but it's a consensus sort of mechanism to get what is best for this community. Let's debate it, pick a direction, and go in a way that provides stability and security for the people building on our project, and not this sort of volatility and uncertainty of what might happen that is going to scare people away. And so I still think those use cases are, in the very earliest stages, and seeing things like ad stacks and the coupon bureau. It's those are things that just would not be possible on other chains.
Sure.
I think one, because the fears of things that I just talked about, and two, the technical efficiencies of the Hedera network, and the throughput and speed and energy efficiency and cost and all those benefits that your listeners, I'm sure, know and love, really create some advantages here.
Yeah, I mean, I really do think long term it's going to work out. The other thing that we talk about is, the uncertainty about the uncirculated supply of HBAR. They've been very methodical in how they're putting it out. So there's uncirculating supply that still is going to hit the market at some point. So that creates uncertainty. But, all of those things, you go 5-10 years down the line, and then we have just a bunch of infrastructure built. We also have, the governing council. People understand that more. They understand some of the use cases that come out. The circulating supply is closer to max supply. So all of those uncertainties kind of go away. And in the long term, it'll work out.
Yeah, I think you're right with the foundation is, it is creating, probably a little downward pressure on the price in the short term, because, they've got people that want to build things. There is a little bit of catch up there. There's no doubt. There's a ton of developers on networks like Ethereum that have built, all of the infrastructure around it. And there was some catch up to do, I think, on the Hedera network, where other ecosystems might have a Model T sort of chassis and engine with all the bells and whistles to go around it. Hedera was the Ferrari chassis and Ferrari engine, but we didn't have doors yet, so it's we're just getting things the Hashpack wallet and Saucer Swap, where you can, staking, all of these things are just coming along. And I think whatever you think about the short-term pricing pressure those foundation grants are creating, it's building a much stronger kind of foundation for the ecosystem to build more things, have all those tools in place, all that infrastructure in place, to for people to be able to really develop cool stuff on top of this platform.
Yeah, I mean, it takes a little bit longer, but you mentioned Hashpack and Saucer Swap. I've talked to a lot of people that have come over from different platforms, and they come over and say, this is a whole new game. This is amazing how fast it is on Saucer Swap. Your transactions go through in a few seconds. It only costs you a few cents. Hashpack is super user-friendly, all that kind of stuff. So yeah, it took us a little bit longer, but now that we're hitting our stride, I think we're in pretty good shape.
Yeah, whenever I mentioned we were learning about DeFi over the past year. And so, we've put some smart contracts into place and things. And it's the network is busy and you need to do this. It's holy shit, we just spent $300, doing this. And it's when the Hashpack had came out, I did some staking. It's well, that took 3 seconds and it cost me 2 cents or whatever, and it's
exactly. Yeah.
It's the disparity between that experience is just so it's so different. And it's one of those things I think if anything, over the last 6 years we've been involved here, it's just a little bit of head scratching on why is this not already a top 5 or top 10 project? It's just it still seems destined for that, and anybody who's experienced those things, I think, get why.
Yeah, it's taken a while, but really, I mean, Saucer Swap's one of the first one where you could really get your hands in on it and really figure out how it works and all the benefits. So I think that's going to pay off in the long term. All right, so to get back to the VC world, David Lane of Pari Fund mentioned in a recent interview that over the past few years, over $100 billion has been raised by DLT-focused VC to deploy in the space. How much of this do you think has been deployed? Said another way, how much capital is sitting on the sidelines ready to enter the space?
Yeah, it's hard to say how much has been deployed, but I think there's a lot of capital on the sidelines. I mean, there's been a huge amount of interest in this space. I mean, the Andreessen Horowitz most recent fund is $4.5 billion. There's, the woman who left there to start Han Ventures is like
Hmm.
$1.5 billion, and I could go on and on, but like I think there's a lot of interest. I mean, I think kind of what the recent kind of price correction has done certainly has lowered, interest. But I think again, you've got to separate the interest in speculating on cryptocurrencies versus, investing in like the future potential of, blockchain as a category, which is what those funds are primarily designed to do. So I think there's a lot of capital out there for, interesting projects, and I think if you see almost any, we're a generalist VC investor. I mean, we're relatively early to, certainly not in the first tier, but relatively early to the crypto space. There's a lot of funds that are just now saying, okay, I need to think more about Web3. I need to understand it more. So you've got the crypto focus funds, which, as I mentioned, there's some really enormous ones out there. But I also think there's very few VC funds that are, more generalist kind of funds that aren't looking at Web3, thinking about, okay, like there's a lot going on here. Like we need to get up to speed. We need to get involved. We need to start placing some bets. And so, if anything, I think there's probably, more momentum, more potential money coming into this space, kind of looking forward.
Oh, that's exciting. So, what has you most excited? We could just say in the crypto space, but tech in general in the years to come, when it comes to investing capital and where to deploy capital.
Yeah, again, I think this is like one of those moments where, I'm excited about the potential of the space. I think there's like it's probably a much better time to invest, given that, I think valuations will come down to earth where it feels more like there's more win-win deals on the table. A lot of the sort of tourists to the space will leave, and you'll have the people that are really, you know, passionate about building a valuable, project or solving an important problem will be the ones that hang around. And so I'm really excited. I think again, like you think about, I talked earlier, like a lot of the stuff you see now is like, okay, it's like a newspaper, but your computer, like the web one. So like we're still like super early.
Sure.
And so I think I'm most excited for the thing that nobody's really thought of yet, where
Hmm.
it's like,
Yeah.
like you think of something like Uber, where it's like, all right, like there's just like all these ingredients, like ubiquitous cellular networks, smartphones, GPS, and like I grab all this stuff together and I create like Uber,
Hmm.
and so like going beyond like let's take what we have and decentralize it, or let's take what we have and put it on Web3 architecture. You can make some like arguments for some of that stuff, and there might be really interesting things to do there. But I think the more interesting thing for me is like who's going to take micropayments and distributed ledgers and like piece
Yeah.
together these things in a way that's like, oh, like here's this totally new huge thing that
Yeah.
wasn't possible until now, and now it's like it's going to be the next big category, or I think those things have not quite emerged yet, but
Yeah.
I believe they're coming. So that's, I mean, certainly excited about that.
Yeah, you get all these exponential technologies, robotics and self-driving cars and DLT, and they start to feed off each other and make it that much more exciting.
Yeah, exactly.
All right. So I've had a blast with this, Aaron. I've really enjoyed this conversation. Do you have any final thoughts you'd like to pass on before we let you go?
No, I mean, this is great to meet. I think I really appreciate what you're doing for the ecosystem. I love, we've been really early to this project, as I mentioned, and I just love it when I bump into somebody and they start talking about, HBAR or, Hedera and, Hashgraph. And like, every once in a while I bump into somebody and they're like, I saw that on your website. I learned about it 2 years ago. And I just love that. Or it's like,
Sure.
occasionally we'll meet somebody who's building on it and they didn't even know that we invested, and it's like, I found this network and it's fast enough to do this thing that I needed to do, and it's like you're just sitting there like smiling. It's like just
Yeah.
love to see other people learning about it. So really appreciate what you're doing for the ecosystem.
Yeah, that's good to hear. Aaron, again, thank you so much and good luck with your fund.
Yeah, thank you, appreciate that.